Good afternoon, everyone, and welcome to the SAVCA 2020 Venture Capital Industry Survey launch. We're very happy for you to join us this afternoon, and we're very excited about the survey that we'll be launching. We've got an interesting lineup for you, and we'll start with Stefan Lambrecht from Venture Solutions, our research partner, who's going to take us through the research findings for this year's industry survey. We will then go over to Hendrik Snyman, who's going to talk to us a little bit about changing our mental models and how we can set ourselves up for growth and formulating sustainable strategies. We'll then head over to friend of SAVCA and vice chairperson or co-chairperson of Modise, Matsi, who's going to lead a conversation about a specific deal that took place in the HealthTech sector. And then we'll also open up the floor for any questions that you might have. If I can please ask you to use the chat function to make any comments and share any thoughts that you might have as we go through our agenda this afternoon. But if you've got any specific questions that you would like our panelists to answer, if you can use the QA function for that. We don't want your very important questions to get lost in the midst of the chat function. So feel free to ask your questions in the QA function. We've earmarked some time after the formal presentations for the question and answer segment, but happy to take some of those questions as we proceed this afternoon. Vicky, if I can ask you to move us to the next slide, please. I think it's important before we start looking at the industry survey results for 2020 is to see where have we come from. And Venture Solutions have been assisting SAVCA with the survey since 2010. And the actual first survey that we conducted was 10 years ago. So this year marks the 10th anniversary for SAVCA to embark on venture capital research. But as you can see, we are now in the 7th research. And for the first few years, SAVCA only conducted the research every other year, every 2 to 3 years or so, because there wasn't enough venture capital activity to report on. Next slide, please. So in the first survey back in 2010, and I'm sure this would resonate for those of you that have been in the industry for many years, there were hardly any VC transactions we see now in 2020. We can see that there was a growth in transactions leading up to 2008, and then after the global financial crisis, it took a major dip in terms of investing into early stage investments. So what I want us to appreciate today is how far the venture capital industry has come, how much growth we've seen, and given our current economic climate and the circumstances we find ourselves in, how important this asset class is to South Africa and the recovery process. So without further ado, I'm going to ask Stefan to take us through the venture capital survey results for the 2019 calendar year, and just give us the most important trends that we need to be aware of. Welcome, Stefan, and over to you.
Okay, can you hear me now?
Yes, we can, Stefan. And if you can
Okay,
just
good.
put your camera on so that we can see what you look like as well.
Okay. I think it's just the host needs to put me on because she stopped me. Bookie. There you go. Okay, can you see me now?
Yes, we can see you, but we can't see the presentation.
Okay.
Quickly
Bookie
get
is
that.
going to run with the presentation.
Yeah, I'll quickly
So
get that up.
I think we can put me down again, but then, okay.
Great.
Very good. Okay, thank you very much, Tanya, and thanks for the introduction. Yeah, some way that we've come in the last 10 years, and I think not a lot of that is appreciated in mainstream media in terms of what's really happening in our economy. I think if you look at the number of transactions and where we are today, it's chalk and cheese. So just to run you through this year's survey, and again, we are looking at research related to the transactions done between 1st of January and 31st of December of 2019. So looking at the calendar year of 2019. Okay, so we've had quite a lot of deal activity. Again, an increase on the previous year. You can carry on next, Luki. We've got now an overall total of more or less 6.3 or almost 6.5 billion rand. That is divided up into different portfolios, but all active portfolios. And that means that the investors are still active in the transactions and transactions are still live. So we're talking about more than 764 deals. And you can see over the last couple of years, since 2015, from 2016 onwards, quite a lot of growth in terms of the number of transactions. This is the second year in a row that the overall amount exceeded 1 billion rand, which for this asset class is quite significant. I think if you look at the size of the transactions on average, looking at the global average, we're talking about 8.5 million rand per transaction. But there are quite a number of deals that are bigger than that. I've counted in the largest of them just being short of 100 million rand. So that is to be expected with more and more deal sizes growing, also in terms of not just first deals or new deals, but also in terms of follow-on investments, where investors are coming back to the table to put more money into the transactions. So more or less 158 million rand increase on 2018, and that amounts to 162 deals that were reported for 2019. You'll see in the report, I'm not going to touch on that now, but you'll see in the report some interesting comparisons with the US VC market. And one of the figures there that I did not include, but if you go and look at some of these stats, you would find that there are very few states in the United States that receive anywhere near the number of transactions that we record in South Africa. Now, sure, South Africa is a small market, but if you think about it from that point of view in terms of where we rank from a VC point of view, it is quite significant. Okay, next slide. Our investors are still very much favoring early stage transactions. So despite some continued requests in terms of saying we need to put more money into early stage for sure, but in terms of the appetite from the VCs and those that are focusing on this sector, it is very much around seed and startup capital. What has changed quite a bit in the last 2 or 3 years is that there seems to be quite a lot more appetite amongst private investors for putting money into seed capital, which historically was really only grant funding, etc., from the Department of Trade and Industry through some of their mechanisms, as well as the Department of Science and Technology. So more and more people getting into this sector and not just willing to put in money when there's proven transactions, but also putting some money forward in terms of really early stage, getting off the business plan kind of transactions. Next slide. From a location point of view, if you look at the overall asset class, very much focused around 2 areas, being Western Cape and Gauteng, with the majority of transactions in the Western Cape, just ahead of Gauteng, and the rest of South Africa not receiving that much attention. Again, coming back to the report and some figures that I put in there in terms of United States venture capital, people talk about United States or US VC, but very much is that also clustered around 1 or 2 or 3 very specific locations. And even within states like California, there are some areas that are much more favored by VCs and startup activity than the rest of the states. So the clustering of VC, and not just in terms of the fund managers where they are located, but also in terms of the deals, is very much a clustered phenomenon. And that goes according to theory in terms of the presence of all those different attributes that make up a good startup ecosystem. And in South Africa, those leading startup ecosystems very much still based around Johannesburg and Cape Town. Interestingly enough, if you look at the fund manager location, and this is by head office, I know that some of these people have more than one office, but in terms of where their head offices are based, you will find that there's almost 6 times the number of fund managers located in Pretoria or Stellenbosch compared to, for example, Johannesburg, where the largest number of fund managers are based. And that again speaks to the focus around clustering and the focus of co-location. Next slide. Okay, in terms of investment activity, not much has changed from last year. The top 5 sectors is very much driven by transactions that involve some form of software, be that in the development of business products and services or products and services for consumer technology. or consumer products, and then a lot of focus on fintech. If you go look at the next graph, you will notice that fintech has grown exponentially from last year to this year in terms of receiving transactions, attention from VCs, and again, that is not to be. It's not a strange phenomenon. The biggest sector in many years of economic activity is financial services, and it would be expected that fintech, which is really looking towards transformation in the fintech and the financial services environment, would therefore be receiving a lot of attention, and that's reflected in the figures. Okay, next step. This year we included a question where we asked the fund managers to give us more information about where they source their funding from. And they had quite a number of options ranging from the various forms of 12J or through family funds or private high net worth individuals, or from corporate entities, as well as the public sector. And from this, as it is clear that the main source for VC money raised in South Africa is in the corporate sector. And it's been like that for a number of years. But you will see that if you look up at the top part of the graph, individuals through a structure, meaning that's on a deal-by-deal basis, or retail investors where it's raised up front into a 12J structure, is quickly catching on in terms of overtaking the public sector in being the second leading source for venture capital money. Next slide. 1 in 7 transactions, VC-backed transactions, or VC-backed businesses were able to receive a second round of investment in the form of investment from another VC-type investor. And this is significant around the ability of transactions, not just to feed off the initial investment, but also to appeal to other investors. And what is significant around that, and these are on all active deals, this is not limited to 2019 alone, but we're talking about almost 2 billion rand, half of which came from foreign investors, foreign VC investors. And this is significant in terms of the appetite amongst not just local, but the international community in terms of the talent and opportunities that are on offer in South Africa. You will notice at the bottom that the amount of money that was raised for VC in the past compared, and I looked here 2014 compared to 2019, 26% of transactions, sorry, those 2 years are swapped the wrong way around. In 2014, am I reading this correct? In 2014, 74%, no, that's correct, sorry. 74% of transactions in 2014 involved, sorry, let me just correct myself. I totally lost track there. In terms of the involvement or the amount of money that was invested in 2014 by public sector, it is considerably less now in 2019. So 26% of all money invested came via the public sector in 2019 compared to 74% in that particular year in 2014. So quite a significant drop. But again, if you look at the role of public sector and really being there to step in where there are market deficiencies or shortcomings in the market, if you look at what's happened in the last couple of years around VC investment, and especially in the corporate sector getting into VC, it makes sense that it's not necessarily such a huge reduction in the amount, but it's really the uptake in the corporate side and the private side that has driven a lot of the change in that statistic. Okay, next slide. Okay, my last slide is really, I think, the biggest success story of 2019, and that talks about the exit activity. You will see on the right-hand side that for 2019, the number of exits are more than double than what we had in 2018, almost a 300% increase in terms of the exit activity recorded in 2018. Now, we expected this in 2018. I looked at the stats from last year, and there was mention made of the fact that there are a number of exits primed, and compared to the past historically, this is by far the largest amount of exit activity that we've seen since we started the stats. Almost R1 billion returned to investors, and half of the exits were profitable. And still the same as in the past, the largest number of those exits were in the form of trade sales. Okay, I think that's all I'm gonna leave you with now. I think the report has got a lot more information, and I really encourage you to read through all the different insights that we've gotten there. And then just last side from my side is thank you very much also for all your participation, especially this year with COVID and making a lot of time available for interviews and sharing information. I really appreciate it, and I think the report is very much the better for it. Thank you.
Thank you, Stefan. Before you go, I just want to ask you two questions. The first one is, you and I had a discussion about a trend that you've seen called venture leasing, which we're not reporting on in the survey in terms of the results that you've just showed, but it might be something we need to report on in the future. Can you just maybe tell us what venture leasing is and the trend that you're seeing?
Definitely. I think in the report, you'll find there's a statistic there for a number, I wrote it down here. It's around 652 million rand. That is transactions that were categorized as venture leasing. Now, what we're doing from a SAVCA point of view is we want to be sure from year to year that we're comparing apples to apples. And venture leasing is a new phenomenon that it's been around for a number of years, but it's really taking up where you can call it a form of corporate finance, but it's really around where a VC would raise money and they would utilize that money as an investment into a special purpose vehicle where the focus of that vehicle is around some form of an asset lease. In South Africa, most of those asset leases are going towards solar projects, so in the form of either being solar panels, or it could be some preparation of a solar site or a renewable energy site. But you see it as far as wide as other industries where the financing of specific activity for a startup is just too expensive or just plain impossible to get to. And that's where some of the VCs have stepped in. The reason why it is different than a normal lease is that the VCs themselves take equity in that transaction. So they still have skin in the game, which means from a risk point of view, it is different than a bank doing some form of finance. But the reason why we've put it aside is that that form of finance is still, from a risk point of view, definitely different than if there was no asset. And that's why we put it separately to the rest of the transactions. But it invested in the last year, same as last year's 2 billion rand. So over the last couple of years, we've got almost 1 billion rand that's gone towards these kind of asset leasing transactions, meaning additional capital available to startup entrepreneurs in over and above the equity finance that we're reporting on here. And I see that as a trend that's going to increase. And I think in the future, the report might have more detail on this, and we'll give you guidance in terms of how to report your transactions. But it's definitely an exciting thing to look at.
Especially in the early stage, in fact, as you said, for entrepreneurs and startups, especially if there's capital intensive startups, they need additional support over and above the equity investment.
Yeah, and I mean what is exciting about it is that, and not to step on the toes of the banking sector, but we are not just talking about finance. We're talking about a VC investor that is, from an equity point of view, part of the transaction. So the amount of value that comes to the transaction is a lot more than just credit, but it also talks about having skin in the game of really seeing that venture succeed in order to get the payback that is ultimately looked for from a return of investment.
Perfect. Thank you, Stefan. Really appreciate it. And thank you for all your support with the research as well.
It's a pleasure.
We look forward to see, because I suspect, 2019 looked really good. We have no idea what the 2020 figures will look like as a result of the pandemic. So I don't know if you've got any early indicators.
I mean, I asked people, because everybody wants to know, and a lot of the people were actually in some form of quarantine or either self-induced or induced by somebody else. So it was a very interesting survey, this. But yes, one of the questions was, how do you expect this to impact your investment activity? And I think the long and the short of that is that VCs raise their money up front. Most of them have got some kind of an indication of the line of credit or the line of capital that is available. And most of the investors reported that they were busy spending money that was already raised. So in terms of money that's already available, apart from a few sectors, such as, for example, in the hospitality sector, as well as the retail and food sector, where you can imagine, somebody that's put up money to invest in a restaurant chain, they suffered quite a lot. And the same with some people in the early parts of the lockdown that had manufacturing activity where they had to stop activity for a while. So they took a bit of a knock. But for the rest of the investors, most of them reported that it was business as usual. In the same way as we're doing, having a Zoom session, really being more productive, being zoomed out, but really not really expecting to have quite a negative impact in that regard. I think where we might see a difference if we have to look back, not necessarily next year, but in the years thereafter, would be from a fundraising point of view, because I think fundraising generally is difficult, but in this year it could be more challenging from a VC fund manager trying to raise new funds. Although having said that, some of the people reported that given the reality of where we are as a country and our economy, there is more of an appetite for early stage activity and therefore more money earmarked for that. But whether or not it would actually get to the fund manager, we'll have to see in years to come. So let's see. I think it will be interesting, but on the ground, on the immediate fact, most of the people are operating.
Thanks so much. We'll come back to you in the QA session. I see there's a question that have popped up, so we'll touch base again then.
Thanks.
I'm now going to hand over to Hendrik, or shall I say Dr. Hendrik Snyman. Thank you so much for joining us. Hendrik is the deal principal at Gaia. And he's going to talk to us about the business of mental models and a very topical notion of how can you formulate strategies for survival and growth, specifically what I think a lot of us are seeking, especially in the times that we're in. So Hendrik, over to you.
Thank you very much. Thanks for the opportunity to present the findings of my PhD. I just want to confirm whether my screen is sharing correctly.
Yes, it is, Hendrik. We can see it.
Thank you very much. So my journey began in private equity in 2010, and I soon realized that in various investment committee meetings and pitches to the investors, that there was no real consensus, or there was a limited understanding as to the criteria and the decisions which lead to success, or alternatively, on the flip side of the coin, to failure. I found that the debates often focus on one or 2 points without a real appreciation for the system of a business as a whole. And that in most cases, both the entrepreneurs and investors base their arguments on their own experiences and education. And this to me was a very concerning revelation in the industry, because the best arguments didn't always win. And in the immortal words of Ray Dalio, I don't believe you can trust your own experience, because the experience of a single lifetime is too narrow a perspective. So this took me on my journey to look back in time and gain basically the collective perspectives of all those that come before me. So let's look at how decisions are made. Decisions are made that will either follow a path of least resistance, which is very dangerous and stupid in its own right. But most people reason by analogy. That is to say that they find a comparative situation or problem, either in their own lives or something that they've witnessed elsewhere, and make their decisions based on the results that were achieved in those comparative scenarios. The best quality decisions, however, are made when people use mental models. Now, our entire world is made out of systems of interrelated components, and these components interact with each other. And what mental models do is they effectively cut through the noise. They filter the system down to its core components and how they work together. And ultimately, it helps you make better decisions because it gives you a thought process about how something works or should be thought about. Now, mental models should effectively be built from first principles to derive the best quality decisions you can make. First principles comes from arguing from philosophy and form the basis of any argument. On top of first principles, people build theories and hypotheses, and at the highest point are ideas and opinions. And the first ones to topple are both ideas and opinions and hypotheses, but first principles will always remain. First principles were often used by, or said to be used by, the likes of George Bezos and Elon Musk. He used it when he argued against people saying that you shouldn't go into EVs, the cost per kilowatt hour is too high. And then you referred them to the London Metal Exchange, where he effectively just said, well, if one has to look at nickel, iron and lithium and the various constituent components of every battery, even in today's terms, without, even at that point in time when they had conceptualized Tesla, you could buy all those metals and construct a battery for $88 a kilowatt hour. They are supposedly will be reaching that milestone now on battery day on the 22nd. But it effectively shows you that by thinking in terms of first principles, you can cut through the various noise and don't have to live with the expectations of other people's results. So this brought me to the question, what are the first principles that underpin the survival and growth of new ventures and SMEs? Effectively, we all need to understand what a business constitutes. And a business constitutes a pool of resources. Those are financial assets, tangible assets, which is machinery, a building, computers. You have intangible assets, such as IP, the right or a contract. And then you have intangible resources. Those are relationships, the knowledge, the collective knowledge that is built up within the business. And this is where one truly has to understand that knowledge is at the core of every business. And so to every successful business and successful strategy. So knowledge is the glue that holds the business together. The collective knowledge effectively demonstrates or illustrates what the business believes are the right resources to put together, how they should be organized, and which opportunities one has to pursue. Now, ultimately, a business's survival and growth depends on this concept of what is called strategic fit. It's the degree of adaptation that the business has to its external environment, and this adaptation is in constant flux. What is a success factor today is not going to be a success factor tomorrow. So in order to get a high level of strategic fit, it requires to know what others don't. So this brings us back to that concept that knowledge is at the core. So one has to know something that someone else doesn't about opportunity, how to effectively utilize resources. And in terms of survival and growth, with new ventures, it's often linked to the idea of overcoming obstacles and obtaining success factors. So let's see why businesses fail and why businesses succeed. If I was to ask anyone to draw a comparison or to imagine a business which they see as successful, they would invariably list a number of factors. So in the beginning, new ventures have a high degree of failure. That's because they have a high degree of knowledge novelty. That is defined as an ignorance or a lack of knowledge. The social gains knowledge, learns what works and what does not. They gain this knowledge and there's associated success factors, and so the risk of failure declines, and conversely, the probability of success increases. But one does not have to absorb this knowledge over time. One can effectively put into action entrepreneurial actions, which are measures to overcome novelty. That is to say, you can hire the right person who has the necessary knowledge within the specific domain. But unfortunately, these risk reduction strategies are not absolute. Hiring that right person, if that person was to no longer be with your business, you would effectively increase again your risk of failure. There are three domains of risk that a business has to address, and those are within the market domain, production, and management. And not only do you need to gain the knowledge as to what are the success factors and how to obtain the necessary resources, but you need to obtain the knowledge as to how to install that knowledge in your partners and customers. So that's other stakeholders who might be able to help you to address your risk, or a customer who or potential customer, you need to be able to install the knowledge in them as to what is the benefit of your product or service. So this is the ultimate model that I came up with, distilling somewhat of 50 years worth of knowledge as to what determines survival and success. The first determinant of survival and success is motivation. Hardly any business grows or survives if there's not a motivation to do so. The motivation of the firm is affected by its internal context on the left-hand side here. That is to say, what is your background, your education, and your access to resources. And so motivation to achieve growth and survive is impacted upon the opportunity, the scale of opportunity, and the competition. Now, motivation then impacts upon what they call entrepreneurial orientation, and that is a willingness to overcome obstacles, to obtain the necessary success factors, and then to pursue new opportunities. Entrepreneurial orientation in their effect will impact upon strategic fit, the match between the internal resources that I have and the external opportunity which there is, and the means to which you're adapted to pursue that opportunity. And strategic fit in turn will impact upon your performance, which will give you new information as to what works, what did not. It will give you access to new resources, but unfortunately too, it will give information to the external context in terms of your competitors, but it will also provide new information as to the benefit to your customers. So this thing of, or this concept of strategic fit, the match between the internal and external environment, you have at its core, you have the opportunity, which you need to identify. And then within the three risk domains, be it management, production, or and within production, there's the concept of technology and market. You have to identify obstacles and the success factors. And then effectively, all strategy is the means to say, these are my obstacles, these are success factors, and how will I bridge the gap? And by doing that, you automatically reduce your risk of failure. And so to both investors and entrepreneurs, I think should argue or make arguments and investments and pitches based on this idea as to, I understand what my knowledge shortcomings are, I understand where I have to gain knowledge, I understand my obstacles, and this is how I'm going to overcome those obstacles to gain the necessary success factors. So how does one then formulate that strategy to get the ultimate strategic fit? And what theory is telling us and experience is that strategy should not only be formulated in the minds of the people in management, but should very much be a collaboration with the people that is on the ground. You need to constantly strive to gain more knowledge within your enterprise and to retest those hypotheses that you then develop. So what is the strategy model then? What should the strategy model look like? And effectively, it should have 5 questions. At its center, one has to have a core as to why are we doing this? It will be, you need to constantly revisit it, as it's going to be your compass on your way forward. You need to identify who are you servicing, and then you effectively have to answer, okay, if that is who I'm servicing, how am I going to obtain the necessary success factors? The one concept that stood out within research is this idea of blue ocean strategy. Now, blue ocean strategy comes in many guises, but effectively, all it means is to be extremely successful. The likes of Capitec, who's seen as, you know, the blue ocean, blue-eye child, for want of a better word, in South Africa, rather than optimizing a cog in the system, you need to optimize the system itself. So rather than being a business that does something a little bit cheaper, a little bit faster, if you can find the means to optimize the entire system, then effectively you've obtained the elixir of life. One then explicitly needs to ask yourself, when in developing your strategy, when will we know? We need to understand that we have knowledge shortcomings. You know, not everyone knows everything, and we need to answer to ourselves, when will we know that we know? And how will we then act on that? So what will we then do? So effectively, constantly what you'll have to do is saying, I'm going to test this idea or our internal understanding of knowledge, do something, and then have to retest it again. To effectively answer the question of who, you have to say, I have to have a core unmet need. And importantly, one has to understand the competition and the industry rules. Every new company out there and new venture has effectively to not only compete with its competitors, but has to compete with the industry and ingrained rules, because otherwise you won't be able to get support from industry partners, and you will struggle to instill upon your customer what it is that you are trying to sell them, because they will not find what you're doing as legitimate. And naturally, one has to assess future scenarios. On the how perspective, one has to identify a core competency. One can't merely constantly try and catch up with someone else. You have to internally instill something that is better than anything else that you can continuously use develop upon, so that other people are constantly trying to catch up with you rather than you with them. A business model in its own right is a very effective mental model to restore a business into its 9 core components. Legitimacy is a very important thing in developing how you will address your obstacles and knowledge shortcomings, because you have to be able to communicate to your internal and external stakeholders as to why you are doing is legitimate. That is to say, why is what I'm doing acceptable within your worldview, norms, and beliefs? Then finally, you want us to address and understand that your knowledge shortcomings and novelties within the market, production, and management domains are different at each stage of development, and you have to recognize at which point is it appropriate to address which one. And effectively, the mental model that I propose that companies can use to assess investments and entrepreneurs can use to pitch their investments and explain it to investors is to use this mental model that I present here, with strategic fit being at the core of it, and this idea of one having to establish what your knowledge novelties are and the means to bridge them. Finally, I'd just like to leave you with this quote from Warren Buffett, and that is to say that to invest successfully over a lifetime does not require stratospheric IQ, but rather requires a sound intellectual framework. So the idea is to not to try to be brilliant, but perhaps not try to be stupid. Thank you.
Thank you, Hendrik. It seems more logical, but I think in practice it doesn't really work that way. Before I hand over to Matsi and before you go, I just wanted to ask you, do you think the pandemic was a knowledge shortcoming? And is it a scenario we could have planned or anticipated for?
It's not a knowledge shortcoming in the sense that I don't think it was within the realm of the expected. What I did see, however, is that firms that were able to survive and grow during the pandemic was able to recognize an opportunity to assess the resources that they had and the knowledge shortcomings that they didn't have, and to quickly find ways to address those knowledge shortcomings, to deliver a product or service in a way that they didn't do it previously, but could then quickly do it. So they were able to assess, I need X, Y, or Z within the market, production, technology, or management domains, and find ways to test whether there was a knowledge shortcoming and whether a method could address the obstacle to success in that fact.
Okay, and then lastly, what is the role of a venture capital fund or a VC player in the portfolio company when it comes to strategy? What role should VCs play?
I think they should play an integral role, and naturally it stands to reason that venture capital funding can help them address many of their own shortcomings and knowledge novelties. And so to the entrepreneur needs to say to the investor, if they were able to provide you with the following funds, I will address the following risk in the following way. So venture capitalists and investors need to be integral in the strategy sessions and strategy development to assess what the true knowledge novelties are, and to say, okay, how are we going to get those and test them, and then come back within 2 or 3 weeks' time to say, what do the people on the call phase say? Are we on the right path? Or what we're doing, is this money and resources we're spending addressing our knowledge and novelty or not?
Okay. Thank you, Hendrik. Once again, appreciate it, and congratulations with your completing your thesis.
Thank you.
We're going to cross over to Matsi, that is going to share a conversation of an actual life case study in the health tech sector. And she's going to introduce her panel, Premlin from LionPride and Mphati from BusyMeds. And they're just going to talk about the actual transaction and a little bit about the health tech sector and the importance it plays given what's happened the last few months. So Matsi, over to you.
Thank you very much, Tanya, and I'm happy to see familiar faces. that are with us today, and congratulations again to SAVCA for being able to launch this wonderful update on what's happening in venture capital. So as Tanya introduced me, I'm Matsi. I'm an entrepreneur, so I have my own business, and I'm also the vice chairperson of Modise, which is an industry association focusing on progressing policy reforms in South Africa for a long time, about 6 years, and we're very happy to say that SAVCA has been with us since day one, because we are the voice of the entrepreneurs. And in essence, early stage investing is a critical part of every entrepreneur's journey. It's also very encouraging to see the strides and the growth of venture capital in South Africa. But such investments must mean something to startups from all walks of life. That is why I'm quite excited and encouraged to be moderating the session, this panel that I'll be moderating today, because it talks to the everyday life. It talks to the people behind the numbers that we've just heard. And in essence, without further delay, I'm going to introduce my panelist, Mphati Jezile. He's the founder of BusyMeds, which is a health tech startup in South Africa, and Premlin Pillay from LionPride Agility Fund, the investor in this in this startup. So I'm wondering if we can see our panelists so that I can start engaging and asking questions.
Baby.
Okay, wonderful, great. There you go. Yes, so Mphati, I think you are the star, the startup that has been able to secure funding in South Africa. As limited as the funding space is, you have been able to crack that code. So tell us about BusyMeds, your health tech.
Well, thanks for the invitation, and thanks for having me, Matsi. My name is Mphati, like Matsi said, and I'm the founder of BusyMeds. And essentially what we do is we wanted to build a marketplace where people could access healthcare services conveniently. It made no sense that in 2020 I could get a pizza to my house in 30 minutes, but when it came to getting, medicine or accessing a healthcare professional fast and efficiently, those tools weren't as readily available. So we started embarking on this journey in 2018. We've gone through a lot of trial and error to get to this point, and where LionPride then assessed and felt like it was the right time to make an investment for this business and this service to grow.
All right, tell us a bit about the company and what it does exactly. What solution are you solving in society? What solution are you providing in society?
All right, great. So BusyMeds is a mobile application that allows you to connect to your local pharmacies the same way you would walking through the store. 63% of all South Africans use pharmacies as their first point of contact when it comes to healthcare services. But unfortunately, much like a lot of areas in healthcare, innovation has been very slow and sometimes very lackluster. So we thought this was a great time to see how do we kickstart and improve that connection between patients and these businesses. So we started our first trial in 2018, and it was a very simple concept. Was if we handed out a bunch of flyers and we told people that we could help them source medication in terms of knowing who's got the inventory, know what the pricing is comparatively, so they know where they can get the best stuff, as well as get it to them fast and efficiently. Would customers, the public, really be interested in that? So we did just that. We handed out flyers at the traffic light in Port Elizabeth, and we waited for the phone to ring, and it started. So between April and October of 2018, that's all we did. We were just taking calls between 8 a.m. To 11 p.m. Monday to Sunday, calling different pharmacies, letting them know that, hey, customers just called to ask for this insulin or this prescription and so on. Do you have it? Some would, some wouldn't. Others would call asking about price. I've got $100 and I'm looking for something to help with my throat and cough. We're not pharmacists, so we've got to call the pharmacy and say, hey, we've got a customer, could you talk to them quickly? And once they've been able to make an arrangement, we would then go pick it up and deliver it to the customer. And then from there, we felt we had gathered enough knowledge and information to start investing in the technology to automate this entire process, because the manual way was just not going to work. So we invested in our first MVP, which was horrible. but it managed to get enough traction. We got 439 transactions happen on that platform that allowed us to know, okay, cool, this might be worth doing and doing properly. And I think that's the time where LionPride stepped in, and they saw the vision and the work that we were trying to do, and were able to create something that yeah, for people.
Wonderful, Mphati. Thank you so much for sharing that journey. And Premlin, you are the rock star that decided to invest in a dream, to invest in an idea that became a business venture. So please tell us about LionPride Agility Fund. What is the fund all about?
Thanks, Matsi. Thanks for inviting us. Pleasure to be here. So LionPride is the Agility Fund is a Section 12J venture capital company that was founded by the LionPride Investment Holdings firm. And our founders include names that people will be familiar with. It's Dr. Ruel Khoza, former chair of Nedbank, Jeff Rothschild, who used to be the chair of the JSC, and Paul Makwana, who used to be the chair of ArcelorMittal. And everyone knows Yvonne Chaka Chaka needs no introduction. But amongst the myriad of things that she does, she's also the director of NIPAD Business Foundation. Stanley Subramani was the deputy CEO of PwC, and Devin Davender, formerly of Deloitte, and who is currently our chief executive of the fund. So well-known and credible bunch of founders. And our focus and investment mandate is very much on socially responsible investments, particularly in HealthTech, EduTech, and FinTech domains that add value to the lives of people in South Africa, particularly what is termed the bottom of the pyramid. So we look for investments that efficiently remove the friction and remove the costs out of people's lives in this segment of the market as they access health, as they access education, and as they access financial services. So we met Mphati and BusyMeds in 2019. They were introduced to us by our venture capital industry colleagues at HealthTech and Lesson and his team. And the investment appealed to us. You know, we took a long period of about 8 months to look at the business case. And yes, we do take a long time to look at the business case. So we've got quite a talented team that looks hard at these businesses through a number of lenses, and I'm sure it felt like a lifetime to Mphati waiting for a decision. But as we poked, we prodded and reshaped this business case, we believe that it would work, and we made our first tranche of investments in May this year. We followed it up with a second tranche in August this year as the build-out of the platform looked really successful, and it soft launched on the 1st of September, and Mphati will tell you more about that. And now, as of today, we're very positive about the investment, and we're concluding the final tranche of investment in November this year.
Premlin, thank you so much for buying into Mphati's dream in it. And I think, Mphati, it's important to acknowledge the challenges of many startups in the country around funding. They say when you're starting up, I mean, you started up 2 years ago. So this is phenomenal, that amount of investment. And as you know, as a startup, they say family fools friends, right? But you're lucky to get an investor, not any of those three. So yeah, what was your briefly unpack it? How were you able to convince an investor of this challenge?
I think the journey of raising funding has felt like a very strenuous mission. It's not as easy and as glamorous as movies like The Social Network and all these other things will have you believe. And my first experience with raising funding was in 2018. I think it was 2018, where I actually snuck into a SAVCA dinner thing that was happening after one of your meetings. And I remember the lady asking me if I was a SAVCA member. I was like, yeah, of course I am. And I went to this event, not knowing what to expect. And all I did was just ask questions around what VC was, what's the best way to actually raise money, because I had no idea. And one of the things that I picked up there was just how to become investor ready. You know, you're asking people to take their money and dump it into your vision, which might not work. So I felt that after that, we weren't ready to raise money, need somebody to raise money for us. And in 2019, the reason why we decided to pour our own capital into Run is we needed to also convince ourselves that the mission that we were on was worth it. That even if we lost everything, what we were going to as a smaller community. And when we discovered the why, we felt we were ready for the win. You know, this mission that we lacked. I don't have a technical. I'm 30 years old, and I've gone to pharmacies for the large, the whole business model, and we saw that it worked. But we want to give us access to resources that could improve what we'd already did, because you can have another place at another time. So, right, but it takes a lot of listening and understanding. In hindsight, even at this, we have done things ourselves, but we know that we set up of resources and how to line for most entrepreneurs and most of the other entrepreneurs that I've spoken to when it comes to steps and getting yourself ready. And when you are ready for it, people.
This is such the risk associated your fund will look at, and particularly.
Yes, so seed funding is particularly risky, but we believe that we have access to that seed funding. So we had to look at the seed funding, and the answer was very much yes. A lot of our entrepreneurs in South Africa, intergenerational wealth that often found in the northern hemisphere and so forth, and they aren't able to create MVP, can say, hey, I want to look at it post speed. So we don't have access to that capital, and we have to build our these investments, and how we risk rate these investments very much with that in mind. As it came, that come to mind around this is that we had to ask the questions, what are the health opportunities accessible? And there were three things for us. One, the opportunity saturation. It had to reduce costs, and it had to improve accessibility. And we should put it on this way. We need three of our criteria. One is that to have a good value proposition. The people want that problem to be solved, and that's rare when people come. We actually building something that will solve the problem. Secondly, that it's not easily replicable, as Mphati said, the way. The third portion for us around from a tech perspective is how do we make it scalable? Because the problems of South Africa aren't unique to South Africa. And from a LionPride perspective, we take a continent view. We like to invest in businesses that we can scale across the continent. And so for us, scalability across the African continent was important for us. So we took these 6 factors, and that's how we built this scorecard when we look at our investments in health.
Wonderful. Thank you so much for those inputs, Premlin. I think, Mphati, a question that I have for you, and it goes to the saying of it takes a village to bring up, a child. Not to say that you're a child, because you're now over 30 and you're an inspiring South African star. You to get to where you are, and there's a lot of support that you have there. So just what role did they play, within your journey? And I ask Ian from Havaic to talk about how, why they wanted to help you on this particular journey. So you tell us we have an ecosystem that supports an entrepreneur like.
Okay. I think during our period, it's very clear that not every VC or early stage investor, not many were willing to take a risk. At seed level, that's to compare to. So, there's not a lot of health tech business the way we do. So people didn't really have the appetite, and one of them was Havaic, that mandated from the website that they dealt were very accommodating and open to meet, to chat with me about. We were very young, but they saw value in what we were trying, opening the door to come chat to them whenever I was me in establishing a relationship with Lion. Much like a lot of startup entrepreneurs, we aren't approaching VCs. It was awesome to have a partner like Havaic who said, well, we know, so I went home, did all my homework, presented whatever it is they needed, and then they started to ultimate connection and ended up the ideal. We took the time, like Premlin said, we worked through a lot of things in order to refine the business model and really get the business ready for investment. So I think players like Havaic, both from an investment perspective as well as from an advisory perspective, are incredibly valuable for startups like mine who don't have these connections but are willing to assist in creating them for us. So that was the nature of how we got to work together.
Great. Ian, welcome, and thank you very much for getting Mphati and his business to where it is today. And it also talks to the role that organizations like yours play in the ecosystem. Tell us a bit about Havaic and tell us about the journey to nurturing Mphati to be where he is today.
Yeah, sure. So hi everyone. So at Havaic, we invest in early stage high growth technology businesses. One of our key focus areas, as Mphati pointed out, is HealthTech. So we're more health tech focus, so it's very much on top of the investing side of the business, which is very much our core operation. We recognize 2 things. So often, like in the potential, but you may need a little bit of help in terms of governance, company documentation, etc. So we offer that as a sort of to our portfolio companies. We offer similar services of structuring, capital raising, partnering, etc. For us, and one that we very I'd say proud of us and what we did. It's got to do everything with the time of person that is trying to get quickly. So basically, I mean, as in practice, we like to work with businesses and entrepreneurs. You know, who offer something different, something is accessibility and almost bringing a competitive something unique health tech needed a sort of special secret source with the model and the opportunity set that SWOT analysis and all those. And the thing that really showed quite, I think we emailed them on the physicists who were available to chat on Monday morning, probably super early. And of course, he said, yes, great, I'll see you there, I'll be meeting. And was like, so the first question I asked him was, you know, when did you arrive in Cape Town? He said, well, I drove from Port Elizabeth. I left at 12 o'clock last night, and about Mphati was the person. This was someone who saw an opportunity, took it, you know, with both hands. And from there, you do everything you can to help this entrepreneur. I mean, that type of spirit, you just simply you can't teach that in school, and someone who can make success in the startup ecosystem.
Beautiful. Various roles to ensure that we, by the way, little known fact, he's from Benoni. That so that is the power of that leap of faith and giving him an opportunity. 5 more minutes to go. Mphati, I'm going to start with you can tell prospects around making sure that your value proposition is not get funding in your own business and in your own few things that but also the right funder.
I think the most important thing that we learned through the process was to critically evaluate our own business, not from the perspective of it being a great idea, but from it being, you know, a good investment. If I went to my mom, dad, you know, friends or family, and I asked them, hey, put $1 million into this, and they asked me the question why, and I couldn't justify clear enough to convince them that it's a good idea, then it's not the right time to really go to a VC. So we had to spend a lot of time to critically evaluate, well, what's the value that I'm bringing to a VC? How do I show them we're going to be lowering the risk over what time? And, you know, a lot of the stuff you don't know, I didn't know. So you pull up Google and you look at what other people are doing, you know, how other people assess stage startup. I think by the time you get that venture capitalist, angel investor, bankable, it's the right time to start raising money. It's so hard to sitting on gold mines before they've even written the business plan and they've gotten wow, you're wasting time. Sure, which is mind that we've got a lot of industry partners, you know, where and why he failed. And that really helped formulate and build the model that I ended up presenting for investment. So those would be my brief tips into well, the best way to, or my best way into finding funding.
Amazing. And I think you've gone around it in a very unconventional way, but a manner in which a lot of startups can actually learn from. And then Premlin, my final question to you is, I think your fund is a great example of a South African fund, an inclusive fund, a fund that goes beyond, goes out of its way to go find startups like Mphati, startups that reflect the demographics of our country. And in essence, for our prospective investors out there is, how do you find more investments such as Mphati? I mean, he's only been 2 years in the space. The risks are probably high, but he is the face of South Africa. He is the face of the future. So how can more funds find prospective entrepreneurs like him and in essence be able to take that leap of faith?
So I think firstly I think you have to change your mental model when you are in this space. So firstly, I think the ecosystem of having industry bodies like SAVCA allows us to connect with people like Havak in this space, so that the ecosystem then allows us to trade ideas and to start to talk about businesses that are there. So the ecosystem is perhaps a really important part to be involved in and getting your name out there. Secondly, as I was saying, mental models really different. We have to start to think about how do we have a different risk appetite in South Africa for our South African investments that have a very specific and unique set of circumstances where they come from, and how do we support them. So from a LionPride perspective, we always take that into consideration of having a different view around risk. And second, we have a very different view around return. Our view is very much a longer strategy and perhaps not such a high reward strategy. So we look to walk the journey for a longer period of time, and we ensure that our expectations around reward are not out of kilter with that. So I guess that would be our view on.
Hi, I'm back. Sorry, I lost everybody for a bit. Yes, Premlin, were you done, or were you still, giving your great insights?
No, thanks. I'm done. Thank you.
Great. I think, Tanya, we spot on in terms of time. And thanking both of our panelists for your wonderful insights. Mphati, you are a hero. You are the future, and just keep going. Keep blazing the trail, and we are so proud of you. And Premlin, thank you very much for investing in South African talent, because yes, we are South Africans, but we have solutions for the globe. And thank you very much for taking that leap of faith. Tanya, it's always such a pleasure to be part of SAVCA. I think Modise and SAVCA is synonymous. And thank you very much for continuing to support the work that we do in the ecosystem.
It's a pleasure, and thank you for facilitating the conversation and always being part of our crew. Mphati, you were really buzzing our team's WhatsApp group, wanting to know where did you sneak in. That was very interesting, and I don't know if it's skills from people that come from the East Rand. Coming from the East Rand myself, I shouldn't judge. If I can ask all my panelists to please switch their videos on. There's a few questions that have come in for each of you. The first question is for Stefan, though. The question was about how many of the exits that we saw, the 38 that you reported on, actually was within the technology sector.
Tanya, I had a look at the stats, and basically all of those exits recorded were either in businesses that develop technology or that are driven by technology. So practically all of them are in the tech space in one way or another.
Okay, thank you so much. And then the other question that came through is, what is your observations around control versus minority ownership levels? I know we report on that in the report, and you've got some stats in terms of the trends that you've seen.
Yeah, I think the overwhelming preference, well, generally the preference is to be a minority stakeholder, and that's from a governance point of view, and from a legislative point of view, it just makes a lot more sense. And there is a statistic there in the report that just deals over, or looks over the number of deals over the years in terms of what the minority preferences were. What has happened over, and we touch on this every year, what has happened over time is that as investors keep investing in the same transaction for a second or a third round, obviously their equity stake starts increasing. So most of those that are indicated in the graphs as having a larger equity stake is not because they necessarily prefer to have a majority stake, but it is just, you know, in time they end up having a majority stake.
So if we've got a growing VC sector and more VC fund managers, they'll be able to be follow-on investments, co-investments, and we'll see smaller equity stakes.
And that's already becoming apparent, as I mentioned earlier, in terms of the number of VC investors that are coming in after the first transaction. So meaning more and more transactions involving a VC as a second or a third round, where that is not the same as the original investor. That is resulting in that kind of equity spread that you're seeing. So I think that trend will, in time, definitely mimic that, and then be similar to what you see in the US or in the UK.
Great, thank you. I've promoted one of our SAVCA members, Gavin, to a panelist, and I'm going to pick on him. And I'd also like Hendrik and Premlin to weigh in on this question, seeing that you're the VCs on this conversation. But a question that came in is, what are some of the challenges experienced by VCs who support tech startups? So Gavin, if you can take that question for us.
Sure, thanks, Tanya. I think some of the challenges that VCs face when supporting tech startups, we could almost look at it from both a ecosystem play, so at a systemic level in a South African environment, but also at a startup level. And maybe just to, you know, one of the key things in dealing with startups is really the ability, some of the challenges that we face, and you really only know about, you try and pick it up in your due diligence, right? But you really only pick it up when you start working with the guys, understanding exactly how the working relationship is going to pan out. I think that the partnership viewpoint is very key. The ability to provide strategy into some of that, into some of the startups from into some of the forward-looking views on that. Obviously, when you're an early stage investor, you ask questions and you invest because you see the opportunities that are across your portfolio. And so you invest not in an isolated view, but because you think you can open up networks and opportunities at a more broader level. And some of the challenges that we see is that maybe in the early stages, some startups and some founders just don't get that yet, and don't get to enjoy the full benefit of that, because that's not the expectation that they come into a relationship with. And so level setting on expectations is actually quite an important thing that really you find out at a startup founder investor level, and it's important to kind of get that right. You know, the leadership development of a founder as the business scales is also an interesting aspect. That is a challenge that we have as investors, because you really are taking something that is early stage, that has massive scaling prospects. You're building, there's got to be a development journey, and some founders adapt to that well, and some don't adapt to it too well. So that's something internally. But if I had to move around two aspects that I think are pretty critical at a macro level, that we see is one, a question that everyone knows, and an ecosystem is a challenge. You don't have the around. You don't have the massive investor pool like you do in more developed markets, and so that is the challenge. It does have an impact on the entrepreneur, and some of the key things that you can do, and understanding, does he have available capital and follow on investment round, or is he limited? And it's just terrible in a VC environment, because you really want to be scaling and really growing in that space. And that we see that it is evolving and changing. Is a corporate activity absolutely everything? There's a difference between horizontal networking and vertical capital ecosystem, where venture capital is more towards partnerships and a view towards faster pace. And I think it's something of, and it's not unique to South Africa, it's one to own everything. And so you have startups that are one acquired early, or to control as opposed to partner with. And that's something it's going to take time. It doesn't happen overnight. And we are seeing changes in that with corporates, but that is one of the portfolio. Startup gains immense traction, and they're not necessarily of the same. There's a different agenda, and that is a challenge that we have to overcome in that context. That's also not unique.
Anything to add?
The evidence really raised some really great points there, both from the supply side and the demand side. So from the supply side, we start funding up a bit more, because I think there's a limited amount of VCs that are looking at socially responsible seed. So I think to do that from this supply side, the demand side, I think there's also a need for us to really look at it really good business cases, and parties was fantastic, and I think we looked at something like party, and now we've actually got a few more coming down the line, but that's also a good chance.
Thanks, Brendan. Hendrik, any parting thoughts from your tech startups? Hendrik, the famous 2020 thing you're on.
From our early stage tech companies are difficult often in the US, where if you get 1% of the market, you already have 3.5. You really work. You need to have massive market adoption. So if the companies will whereby they have been using WhatsApp, if you can speak to them, they love it. and that's just too much of a risk that the technology risk associated with a venture would become too much as it scales.
Those are great insights, Mphati. I hope you listened carefully. My next question is actually for you, and Matsi, for you in your role as an entrepreneur. There's a question that came in from Katie asking that, do you have any advice for someone whose ultimate goal is to start their business? Do they first have to establish a corporate track record before starting the business and seeking funding?
Would you like me to jump in?
You can go. Yes, please.
Oh, okay, cool. I'd say 9 times out of 10, not really. I think if the business makes sense to the entrepreneur and it's burning a hole through their head, every night and wanting to actually do it and start it, it's always best to just start the business. And by the time you want to raise funding, that track record would have happened. Sometimes the result would be astronomical, meaning you've got customers, the product's growing organically, and you've figured out a lot of the hiccups, and I'm sure that looks great to a VC. And other times it's a great business. You've started out small, and by the time you speak to a VC, they see the value long term, and they're still willing to take the risk. So I wouldn't say, whether it's right or wrong to wait first. I just say get started and then start presenting a case. And in my situation, I had VCs basically guide the process to say, this is the point in which you'll be ready. And like Havek did for us, which was, go do this homework and then come back, and did the homework and came back, and we managed to establish the partnership with LionPride. So yeah, I think it's never too early or too late. Just get started.
Thanks, Mphati. Matsi, any thoughts from your side on whether entrepreneurship requires corporate experience?
That's a great question, Tanya. And I think it was a good advantage for me to be able to immerse myself into the corporate environment, because it taught me the essence of creating value. So whether you are in your own business or whether a corporate environment, you constantly have to say, what's my unique selling proposition? What makes me different? What will make me further myself within this environment relative to others? So those principles of constantly waking up and saying, this is the value that I'm creating, this is the value that I'm exchanging, and this is the investment that I'm looking. It's a very important thing. It's not, other people are just natural at this. You've heard of many great, successful entrepreneurs that never necessarily went into the corporate world. I only had 2 years of working for an investment bank, and the rest is history. The rest is me being an entrepreneur. But there's learnings in both environments, but it's not a prerequisite.
And it's a nice to have. But an entrepreneur, there isn't a specific recipe.
Totally. It's your own unique stories. And I do like the idea of your networks, because a lot of the people that I'm doing business with, a lot of people that have opened doors, a lot of the learnings that I've got in that corporate environment were able to enable me to further myself in the business world. So it's a nice to have, but for those who don't have the advantages of being in employment, it is important to be part of an ecosystem. It is important to know players like SAVCA, players like Modise, players like Havek, and the various VC industry. So just plug yourself into a system that's enabling, and plug yourself into a system that's there to assist you.
Thanks, Matsi. And as you can see, the fact that we're promoting people to panelists and come in and out of the conversation shows you how collegial and energetic this ecosystem is. My last question, I'm going to ask Jeff, because I know he's very passionate about this, and it wouldn't be an early stage event if Guy Harris doesn't throw the elephant in the room. But he asked a question about 12J, and Jeff, I know you're very passionate about this. Guy's question was, do we think it will be extended? If yes, will it be adapted? And if no, do you think it will be replaced by something different? What are your thoughts?
Thanks, Tanya. Thanks for putting me onto the panel. You promoted me. I haven't been promoted for a long time. Be that as may. Listen, the jury's out. As you know, the sunset clause is in June 2021. We were expecting something to be announced in the T-bill that came out a couple of weeks ago. and it was silent. The next time that we'll hear any news will be probably when they do the budget in February. We, as a 12J association, has lobbied government and Treasury and SARS, and we have done our own report, which we put in a whole lot of motivation to extend it. Subsequently, SARS came out and put out participants, close to 200 participants. I think most of them participated and they asked a lot of questions. So hopefully they'll get a lot of feedback. It was quite deep. Diving questions: how many people were employed, how much tax did you pay, salaries, etc., etc. What do I think? I think yes, I think it will be extended. On COVID, I think COVID plays a part. Is that I think that government have run out of money, and they need to promote the private sector, jobs in the private sector. They have to encourage entrepreneurship, and the 12J played a big role in investing into the private sector, legislative, type of tax. We're paying VAT. We're paying a lot of taxes. To money back, there's also the capital gains tax that you need to in terms of the tax benefit. There is a timing, obviously. It is one of the cheapest job creation programs that they don't like. We know that Treasury don't like 50% of the monies being invested into. It goes against instinct. It is in the hospitality sector because you've got the development, and then obviously you've got all the downstream events, which is whether it's tour guides, whether it's tour operators, whether it's restaurants, photographers, curio shops, etc., etc. So if they want to get rid of the hospitality industry, they're going to do away with creating a lot of jobs. And I'm hoping that they will entertain it. I think it has been good. Maybe they'll just give it an extension for 3 years and then review it again. We've learned that from in the UK, where VCTs have played, that at the end of the day, all the VCTs have become a net taxpayer rather than just from the tax advantage that they've got. I mean, we are in the early stages, and I'd say that Section 12J has only really found itself in the last 4 years, 3 to 4 years. And I think we're doing good things. So, Guy, I know that it's not maybe, I don't know, I can't give you a definitive answer, but if I had to put my money on it, I'd say it will be extended for a certain amount of time and then probably reviewed.
Thank you so much. I really appreciate it. And to all my panelists and the ones that I coaxed on to join us throughout the conversation, thank you so much for the support. To Stefan for the research and everyone else that contributed to the research. We can't do it without you contributing and Stefan contacting you and then continuously making sure that you give the submissions. But I'm energized by the fact that we're seeing it's growing. Jeff, you said after 2015 there were changes to 12J, and I think we can actually see it in the numbers, that the number of transactions have actually increased up to date. So thank you so much for this conversation. The full report is available on the SAVCA website. If you enjoyed this, I hope it was of value, and please have a great evening and a safe long weekend next week. Thank you, everyone. Goodbye.
Thanks, Tanya.